Adcock Ingram began its life as the EJ Adcock Pharmacy in Krugersdorp. Can you believe it? On the main drag going through Krugersdorp 120 years ago. In any event, it built itself up, got listed on the JSE in 1950, and then was acquired by Tiger Brands. Plenty of companies that happened to. In any event, got delisted, relisted, put back on the exchange in 2008. Since then, it's done okay. It's got various divisions, but the big three are prescription drugs, the stuff that's been registered with the MCC, a bunch of over-the-counter medications, some of South Africa's best-known over-the-counter brands like Panado and the likes. And then it's also got a division which does hospital care products. That's things like intravenous drips and the likes, in partnership with an American company called Baxter. It's got a market cap of around 10 billion rand, price-to-earnings ratio of only 13.3, dividend yield of 3%. Rob, I said only 13.3, but that's been because the earnings have been rather patchy here. And you can see the company does quite well, but in the last couple of years has been a bit of a sideways tracker.
I mean, from listing, they're up 50% in late 2008. So year on year, like 9%. But in the last 2 years, as you can see, they're just planed out and flattened. And actually would have done probably a little bit worse, but they've got such good cash flow. So people come for that cash flow, the good cash flow yield of the company. And they've been paying decent dividends. So normally, their earnings have been tapping down, but they're still buying in that stock because of that free cash flow and the dividend yield. And they're still battling at the moment. Earnings in the last earnings report wasn't great. You can see that little dip a few months ago there.
Right at the begining of January, they came and said earnings were going to be sort of flat to down slightly.
Flat to down again. So, they're battling. They don't have, they lost a bit of the antiretroviral tender. So, and then they had two blockbuster drugs that they also lost.
Yeah, that was that Vioxx thing. That's a thing where globally somebody had a bunch of stuff which worked very well for sort of terrible headaches and migraines and so on. They just withdrew them globally because they found that there was a significant number of people, I don't know, like 2 or 3% of people taking them would actually die. So it was a big revenue spinner for those companies as well as for Adcock, and they just said, look, that risk is too high.
Yeah, absolutely. So they've got a revenue that was pulled virtually from underneath them, and they're still battling. And I think they've probably still got another 2 or 3 years to get back to the levels where they were earning those.
Well, let's talk about their growth strategy, because they did have a go at trying to buy Cipla, failed, and most recently now they've bought this thing called Cosme, which is in India. I think it's about the 50th largest drug company in India.
Yeah, but still quite a big purchase for them, 700 million rand. So it's quite a big purchase. Will they get benefits from that? That's the question. Will they be able to transfer, the drugs into South Africa? And will they going to be generics or not? So we'll have to wait and see there for them as well. But it seems to be, the analysts seem to see that they've overpaid for that. So when we have to wait and see if there's going to be a value accretive for them at the moment.
Okay, because generic drugs, of course, the way that works is people take the active ingredient and then they reverse engineer it. They find a way of producing the same thing. Then they get a biosimilar, they bring it down here, and then you've got to get it registered. The process of registration with the MCC in South Africa is a little bit torturous because the MCC has got like 3 people and a dog that still work there. But be that as it may, that is a model which sort of works. So they can bring stuff, and an Indian partner is important because there's a lot of research driven out of India because they've got quite lax intellectual property laws. But, I mean, I guess what you're implying is that people know that there's some good, solid, profitable businesses in here. I mean, I don't know what fraction of a cent it costs to make one Panado, but that's got to be a good business.
Yes, there are some really high margin businesses within their business and products that they make good margins from, but they haven't been able to get out of first gear really. Because of their cash flow, their yield might go up as well. So they have got money to pay an extra dividend. So I think people are waiting to see, maybe we can hold in. They're not really going to go down. Good cash flow, and then maybe you'll start to get some dividends out of them as well while we wait for them to get back onto their feet.
So this sounds like a bit of a stock for the frog kissers, the value investors that like to buy those that are out of favor. Where are you going to fall on this one? You going hot or not?
Value investing, I'd rather stay out of it for now. I think you can get better with the others.
So even at that scale, feels a bit not hot, but nowhere. We've had this stock on the shows before, had similar conversations, and here it is trading low.
When it breaks its previous highs and starts to move forward, I'll
get more interested. Okay, so not hot from both of us.